to listen to wonderful program coming to you. And please don't forget to subscribe or give us thumbs up. Welcome to KCTV, and in the studio we have a real estate mortgage industry expert, Joshua Matundura. Welcome.
Thank you very much.
Now, Joshua Matundura is going to tell us about, or you need to know about mortgages. Now, my first question to you, Joshua, is tell us about your life and as a mortgage originator, what you do.
All right. Thank you very much, Dr. for giving me this opportunity. A little bit about me is that I'm a mortgage loan officer. I've been doing this for the last 2 years. I got my license in the last 2 years. So what I do is that I am a mortgage broker. I go out there, look for a better loan for you. Instead of you marching into Wells Fargo or the U.S. Bank and get whatever they have, my job is to shop for a better mortgage for you and give you the best interest rate and the best terms that you need for your mortgage.
Good. Now, can you tell us about, as a mortgage originator, like somebody who wants to get a mortgage to buy a home, what are the basic requirements?
So, the basic requirements is, first of all, before you even plan to buy a house, you need to have a good credit score. You need to have a job for at least 2 years for you to be able to qualify to get a house.
Okay.
And pretty much that's what really entails for somebody who needs to buy a house. And then without forgetting, you need to have money saved aside for this big project that you're trying to get.
Okay.
So that's basically what it is to be able to get a house.
Okay. Now, on the same note, you have said before people used to they would go, there were zero down programs, and you have said that somebody has to save money. In the previous that they can give you down payment. So are you saying there is no zero down program?
Oh no, we have very beautiful programs right now, my people. A lot of people don't know about this. You really don't have to have all the money you need to pay for the house. We have very big programs, like we have Shanoa from Orion Lender. We have the cities have put down money for the first-time home buyers to buy houses. So what happens is that they pay for your down payment. All you need to do is just to look a little money for the closing costs. But at least you can be able to be helped a big deal if you really want to buy a house and you're first-time home. There are programs. That's what I'm saying. We have programs that help first-time home buyers to buy houses.
Okay.
Yes.
Now, there is something which is out here right now about the real estate industry. Property prices are going up at an alarming rate. People are scared, they are not affording, but there is also this thing that there is going to be a house crash like the one which happened in 2008, because before 2008, property values were going up and then they crashed. Is it true that we are going to have a crash?
Good question. So what happened in 2008 is there was a market crash because there were no guidelines from the Fannie Mae and Freddie Mac from the federal. To be in a layman's language. So what's happening right now is that let me say this. What was happening then is that we had adjusted rate mortgages, whereby people were just getting mortgages that were really fluctuating. So by then, people could buy a house, and within 6 months, the interest rate could go up the roof, and they were not going to be able to pay for that house. But what's happening right now, what we're doing is that most loans that we are doing are fixed. So what it means is that if I'm giving you a 2.0 interest rate, it's not going to change. Okay. So then you're now worried about 2-3 years down the line, the interest rate is going to change, and you're not going to be able to make a payment for your house. Okay. So all those changed, and we're not going to have a crash right now because there are guidelines that have been set up by the Fannie Mae and Freddie Mac. And the industry is really, really, really strict about this. And it's not going to be a surprise for customers when they're trying to buy their homes.
Okay. Yeah, that's a very good answer. And on the same note, there is, like loan officers, they were many blamed, like in the community where you come from, that the loan officers who were there made a mistake, they misadvised them. Can you explain whether that is true, because they have that notion. So even some of them would they may not want you to do their loan because they think you are birds of the same feather.
Good question. So what's happening right now is the Fannie Mae and Freddie Mac, that's the federal body for controlling all the loans. What's going right now is that you have to be licensed. Back then in the day, what was happening is, people could get in doing loans without being certified. And, crooks coming out from the street and they're doing loans, they don't know what it takes, then they were, kind of frauding the people. But right now, what's in place is that everybody has to be licensed. We have ethics, we have guidelines that we have to follow. So the issue of unprofessional people coming to the market to do a business that they don't know anything about it's not happening right now. So right now, you have to be a profession to be able to be a mortgage broker and, originate loans for people so that they can buy their homes.
Okay. So now the industry is regulated, like there was, you have rules to follow.
Exactly.
And you have alliances to defend.
Exactly.
Which was not...
which was not there before.
Okay. That is very good. Now, how do a person make a credit? Because you talked about that a person who has to get a home has to have a credit.
Yes. A credit is very important. First of all, the reason why you need to have a good credit is because when you have a good credit score, that means that you're going to have a good interest rate. The interest rate is determined by your credit. Somebody who has a 750 credit score is not going to have the same interest as somebody who has a 580. So you need to build your credit, and the reason is that you need to have line of credit. You need to have a debt card. At least if you have like 2-3 debt cards, debit cards that you're paying every month.
Debit or credit card?
I mean, I'm sorry, debit credit cards. So when you have these credit cards, every month when you make a payment, they are reported to the bureaus, and then the bureaus kind of update your score, and that's how you end up getting a good credit score.
Okay.
And you need that so that you can boost up your credit score, because nobody's gonna be able to give you a loan if they don't think you're credit worthy. They need to make sure that at least you are somebody they can trust, somebody who pays bills back, and that's pretty much what happens in the industry.
This word credit, it's much more derived like from, people think when you have a credit, like you have a mobile credit, if you have not used it, it's there. So I have found people saying, my credit is intact because I've never taken any debt. Can you expound on that, whether that fallacy is true?
So, yeah, what happens is, if you don't have a debt, then you don't have a credit. I mean, literally speaking. Because then the system does not know what's your credit worthiness. So, the moment you have a credit card, then that's when they start knowing who you are, how you're paying back the money that they've offered you. And that's how you bring your credit. So if you don't have a credit card or anything you're paying, like maybe a car or something you're paying every month, then you don't build your credit.
Okay.
That's precisely what happens.
Now, I want you to explain someone who's a layman. He has been thinking of buying a home. What does he need to do? What the baby steps can you give?
Yeah. So this is what happens. If you want to buy a home right now, first of all, you have to make sure that you have a job. You must have, we do loans for the bank statement loans for people who have businesses. It's not really have to be a daily job. You can have your business and still, at least you're bringing in income from a legitimate business. Or maybe you're going to a job that you're getting your pay stubs every 2 weeks or 1 week. So you need to have a job, first of all. And then you need to have filed your taxes for the last 2 years. The most recent 2 years for you to be able to get a home.
Okay.
And then after that, you need to have, we talked about the credit, then you need to have that credit that's going to support you. Okay. And then after that, then you are ready to be able to start looking for a house.
Okay. So, and then about the income, some people would just have 1 year 1 year, they have worked 1 year and they want to buy a house. What advice can you give them?
So, we have guidelines. Like I told you, the Fannie Mae and Freddie Mac changed the rules and the guidelines. So 1 year is not enough for you to buy a house. I can be very honest with you. You need to at least work for 2 years. And you need to be consistent. No gaps.
Okay.
If there's a gap, you are sick or something happened, then we have to write an LOX. It's called a letter of explanation to the lender. But you need to be working for at least 2 years. So for 1 year, I'm sorry, you're not going to be able to buy a house for that.
Now, what can you advise? There are so many people who have rented for many years. And what can you advise people who prefer renting because they say buying a home is expensive? What advice can you give them?
Renting, let me tell you. If you're renting, it means that you're still paying mortgage. But the funny part is you're paying a mortgage for a different person. Because that person who bought that property, he's paying mortgage because he got a loan from somewhere. So that's the difference. You don't have to be paying a mortgage for somebody.
You're paying a mortgage, but
it's not yours. It benefits somebody else. So you need to start building your own equity. Buy a house. There's nothing to get scared of. Anyway, you're going to have to pay rent. You have to pay mortgage too. And the good thing is that, it's more easy and flexible to get a home where you are paying a mortgage. If you don't pay your monthly payment, you can call the lender and say, hey, this month I'm not able to, and they let you go. But by 5th, every month, you have to make a payment on your rent. Okay. So, and that money is not being saved up. But when you pay a mortgage, you're saving up that money. And you can sell that house anytime you want to sell that house. And at the end of the day, you have to get money back because that house should have appreciated to a value that is a little bit more than what you bought it. So, it's a win-win situation.
Okay, thank you very much. This is we are going for a break, and then we will come back to section 2 on the same program.
Thank you for watching.